Hello and welcome everyone. My name is Kshitij Bhargav from Financial Express, and today we are joined by Mr. Arun Chaudhry, the Director and Chief Business Officer of Mirae Asset Capital Markets, India. Hi sir, welcome.
Hi Kshitij.
So, starting with stock markets primarily, I wanted to understand what are your views on the market right now, because we've seen heightened volatility. On the first 3 days of this week, we saw Sensex and Nifty close with losses, and today it was a jump, and it was a significant jump considering the fall that we saw. So, what do you make of markets right now?
So, Kshitij, as we all know that the market has been going through a very volatile period, and personally, I believe that the volatility or the uncertainty, so to say, will continue for a couple of quarters more. Now, just to drill a little deeper in terms of the factors which are causing this volatility, I would want to split it into two parts. One is the economic factors, and second is the markets itself in terms of the levels. So economic factors, we are all aware inflation is hitting us on the wrong side and hitting us hard. That's actually caused due to the prices going up in terms of commodities, oil, and then now actually due to increase in interest rates, actually the cost of money itself is going up. That's one. Second, Omicron played incorrectly in the third quarter, and due to which we could see a lot of supply side issues, which was caused especially from China, from Indonesia, and actually it's impacting the world at large. Lastly, the global uncertainties. We all know the war and the situation which has been there over the last 3 to 4 months is causing the entire world economy a lot of discomfort when it comes to the supply, and it comes to uncertainty in terms of the situation that is going to be ahead of us. So that is on the side of economic factors. Markets themselves. So we saw unbelievable. In fact, in my career, I've not seen a bull run like this, where we saw markets running from 7,500 to levels which crossed almost about 18,600, which was a whopping 140% plus return. And I believe from 18,000 level, the correction that we've seen over the last 1 month in specific, I think largely it's quite healthy. Because now it's going to be connected more towards the earnings, and it's going to be a fundamentally strong rally that we'll see. Because I personally believe that the equity story from a larger term perspective is completely intact. The second factor that actually contributed to this entire downfall is also something which is known to us, which is that the FIs have been pulling money continuously out of the markets. We saw on the cash side itself, we saw almost about a 2 lakh crore plus withdrawal from the FIs, which we are very happy to see that domestic buyers, whether it is retail or the institutional investors on the domestic side, supported the index extensively. Now, FIs could be because of the profit booking side of it. It could be because of the global uncertainties, or for the matter of fact, the interest rate itself. So that all these things put together, I believe it's very difficult to comment, because we are seeing a lot of reactions from the governments worldwide. Central banks coming in, raising interest rate at a rate which was unprecedented. So this story will play out over the next 2 quarters, I believe. Yeah.
Okay, so we have seen this fall, and as I said, it has been significant because of the FI selling, as you said. But considering that, I think from the all-time highs, we are now somewhere around 12 to 13% down, and FI selling has also been, they have been continuously selling for months now. So is there a rebound imminent at this point of time, or investors should wait it out and see if market making a directional movement in the positive side?
So I think the rebound is at some time from now. I personally believe that the immediate rebound might not happen, although relief rallies is something that we will see over many days in the periods of the next 1 quarter especially. But when it comes to the investors, I personally believe that they should approach the markets with a word of caution. Diversification of the portfolio is the key. Second, they should be selective in terms of picking their stock. I believe that getting into good businesses, large cap scripts is something that we as a group would suggest at this point in time.
And we talked about foreign investors selling, and there's inflation is also a big concern right now, and then there's the interest rate rising and supply chain bottlenecks. What, in your opinion, is the biggest tail risk for domestic markets at this point?
I think what I spoke of, Kshitij, actually forms to be one of the a couple of factors which actually cause the tail risk. One, of course, and I think the biggest is the uncertainty in terms of the reaction. We saw government impacting the duties, and we all saw what exactly happened to the steel stocks. So that was something which was very unprecedented. We also saw central bank coming in and raising the interest rates. Again, that's not only in India case, worldwide. And now that actually puts the investors or the larger market at a caution orientation, where we don't know what the steps will be. So if you talk about number one, rising interest rates and the reaction of the governments and the reaction of the central bank, I think will be something that we should very carefully watch out for. Second, of course, the FIS selling is something that we are all looking at very closely, because when does it stop? Because we personally believe that we are into an oversold zone when it comes to FIS. So sooner than later, that exit should stop. We should see that money coming in. And third, the factor which I spoke of is the global uncertainty. So Corona to a large extent is behind us, but what happened in Southeast Asia is something that shook the world up when it comes to the supply side. We could see what happened to Indonesia in terms of palm oil and how it's impacting the economies worldwide. We are seeing how the war between Ukraine and Russia is impacting everyone. Oil prices are actually at a very unprecedented level as well. So I believe these three things, watching out for the interest rate stance of interest reaction to the interest rate of governments and central banks, the global uncertainties and how do they pan out over the next 3 to 4 months. And third, of course, is the FII case which is specific to India. How does it play out? I think are the biggest, in fact, not risks, but the caution moments that we should be looking at.
And how do you see that these factors, along with these are mostly the heavyweight factors that are there. How do you see that these will affect earnings going ahead? And how do you look back at the Q4 earnings that have been reported recently by companies?
So I believe inflation is one thing which will hit the earnings the maximum. In fact, the earnings for the quarter to come might, we've seen the commentaries which have been given by the companies might be a little more on the negative side versus what we've already seen right now. Because, and in fact, it's inflation also is quite sector specific. So if you look at the chain of events, the cost of raw material is going up, cost of money itself has started going up. Now, to a certain extent, companies will end up absorbing this price shock and not passing it on to the customers at the end, which will impact their margins. Revenues might continue to go up, but the margins will get impacted. So that is one very important thing that will impact the company earnings. But I don't think it will be a very long-term impact, because the moment this is being passed on to the customers, the price shock is being absorbed by the customers, then we should again be at the healthy earning levels and the healthy margin levels, especially that we'll notice.
So, keeping all these things in mind and the recent bout of volatility that we are seeing, where do you think that investors can find comfort? Is there any specific thing that you could highlight for us?
So if you look at a long-term perspective, I believe banking is one space that we look at very closely. Second is the IT sector as such, because the story of IT is very intact. From a longer-term perspective, I believe these two sectors will see a lot of headwind. And since they carry a very heavy weight in the index also, they will play a lot of credible role. So within banking and IT also, I would suggest that investors are careful in terms of selecting good names. Although the businesses are quite open, they are quite regulated, but the businesses which are very forward-looking are the ones which should be selected.
And now switching gears, you guys have an interesting product in M stock. So and the discount brokerage industry has been picking up pace and is at a very is in the fifth gear, as I would say, and a large number of retail investors are coming in, and also the disruption in broking industry has been massive. So what different is M stock bringing to the discount brokerage industry at this point of time?
So let me start by actually, sorry to correct, but I'll correct you a little. The difference that M stock gets is by creating a new segment itself. So we are not one more in the pack of discount broking. We are creating a completely new segment for our investors. We call this zero broking. Of course, broking industry has seen a lot of headwinds, and as a group, we personally believe that we are still scratching the surface. India is at a very humble 6.5% penetration when it comes to demat accounts. When you compare it with the West, there is a huge headwind available to us. How mstock contributes, number one, I told you that the pricing is completely differentiated. So we are getting a pricing which is at 999, which is a one-time fees that the user gives us. We are making every investment across intraday, delivery, futures, options, currencies. Every segment is completely free for life. So that means all the consumer needs to do is open an account with 999, and the broking becomes completely free for him or her. And I've been getting a lot of questions since we launched saying that, is this an introductory offer? Do you have limits? So through your medium, I wanted to clarify that this is not at all an introductory offer. This is our offer to our customers, which will stay true for life. And there are no limits to this. So whether it's an individual who comes to the market, joins new, wants to try out by delivery investing with a few trades, or it's a heavy high-end trader who's doing hundreds of trades a day, it's applicable for both, and there's no differentiation. So that's one differentiation that we get to the market. Second, so Mirae as a brand is present over 15 countries. What this helps us get is our expertise in technology from these 15 countries. And hence what we are very proud and offering to our Indian markets is technology which is stable beyond doubt. And we are trying to demonstrate that it's secure to a very different bound. So internationally, if you ask me, we handle almost 1 crore trades a day. We handle 15 lakh customers. Every second we handle 90,000 orders.
That is an interesting pitch. I wanted to understand one thing, that who would be your primary target audience? Is it the retail investor or the more experienced investor who is bound to put in more money and they trade in futures and options?
Thank you so much for asking. And I'll again use this medium to clarify. See, mstock as a platform is built for both traders and investors. Mm-hmm. Although in the beginning, I believe the pitch of pricing might attract the new user, the existing users who are hardcore traders more. Okay, but if you really look at the proposition on a larger perspective, what we are charging is practically what you spend in an Uber ride back home if you're traveling 20 kilometers. What we are charging a customer typically is nothing but more than 2 movie tickets that you've seen. So giving financial freedom, or what we quote as future without brokerage, at 999 actually is relevant for both traders and investors. That is one. Second, even more important is that the applications are designed in such a way that we are not intimidating the new user with additional information which is not required or not probably understood well. And at the same time, we are also ensuring that we give enough and more information to the traders so that at any point in time, he doesn't feel handicapped of the information available to him, which is required for trading or investment. So from that perspective, it is from both sides. In the times to come, mstock is gearing up very well to ensure that we are able to give large range of products. We already have practically all investment and trading products available, but we'll add on to that. We are coming out with the MTF also, which is now core offering, seeing that the leverage to a large extent is being wiped out. So just to summarize, the offering is available to both traders and investors. The platforms are customized in such a way. Our customer excellence managers are being aided in such a way that whether it is a new guy or it is an experienced trader, we're able to give comfort to both of them to the platform.
There was this question that I had, and this is something that I've gathered from people that I have talked to in the market, traders especially. So they, in recent times, they have seen, as you pointed out, although you say that Mirae is, in technology-wise, you guys are focusing on that as well, and that is the backbone. And we saw some glitches in the new age discount brokers that have come in the market, and traders kind of, are hesitant in getting their trades over there, and they would like to prefer the more experienced brokerage firms. And do you think that could be a challenge, and at this point of time, and while you're trying to balance between the retail and the traders as well, so do you think that would be a challenge, and how would you like to tackle that?
So I personally believe, Kshitij, that it's not a challenge, it's an opportunity. The orientation of the organization from day one is to get Indians to experience a technology where this becomes table stake. So right now, as you absolutely correctly said, people are hesitant. They have to decide between good technology and bad technology. We want to take that good and bad out of technology completely. So if you're paying money for yourself to trade on the platform, the basics that a company should be offering is a stable platform at the end of the day. And that's what the entire focus is on. A lot of people have come back to us saying that if you're earning only 2,000 rupees, how will you invest in technology? I have clarified multiple times, I'm clarifying again, that a large spend of ours is focused only on technology. Our developments are completely focused on what the client wants. In fact, we launched about 40 days from now. And since our launch, I have been personally looking into every email that comes to us to ensure that our development is completely aligned to what the customers want. Our platforms are completely aligned to what the customers want. In fact, we are speaking on a very right day. Tomorrow, we release a new app. And I'm very proud to say that everything that you say in this changed application is based on what our customers wanted. So that's what we are looking at. The investments are behind technology. It's not a choice that we are looking at. We are looking at it as an opportunity and going whole hog.
So that's all from my side. Really thank you for joining us, and thank you for your views on the market. And we'll be really looking forward to the new app that is coming tomorrow, and also track M-Stock for its more groundbreaking things that you guys are doing in the brokerage industry. Thank you. Thanks a lot for joining us.
Thank you, Satish. Thank you.